Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, it was a strong market performance in April, with many markets, particularly the US, Europe and China, up over 3%. What was the reasons behind that?
Well, interestingly, there's continued optimism about the China-US trade dispute, and the market's taking the view that this will be soon resolved. So China and America will come to an agreement about the tariffs, and hopefully they'll reduce those tariffs or go back to where they were 18 months ago. So the market's driven by that optimism. What's also favourable is that there's been a bit of a pickup in global economic data. So some of the leading indicators are much more promising than when they were last year. So we're starting to see some encouraging signs that global growth is picking up speed. In particular, the US looks quite good in terms of solid jobs growth, but also mild inflation. So that indicates that the Federal Reserve will keep interest rates on hold. And what we're seeing in China in terms of the economic data, some stabilisation. So China's economic growth is above 6%, and the export performance has stabilised, industrial production and retail sales are quite strong. So that's encouraging.
What about Australia, up over 2%, particularly strong performance out of consumer staples and also IT. What was the reasons for the strong performance in those particular sectors?
Okay, in terms of the information technology, that was really driven by the global story. So if you looked at the NASDAQ, very strong performance, and hence our information technology sector was up 7%. But we also saw a similar performance from our consumer staples sector. So if you think of them, Coles and Woolies, these large retail share portfolios, what we're seeing there is that the federal budget announced income tax cuts for low to middle income earners. And because of that, that's improved the consumer outlook. So the view is that if income earners have more spending power, then they will be going to the Coles and Woolies and being more willing to spend. So that's been helpful.
Okay. Now, global government bond yields were also up slightly in April, and yet we're not anticipating any rate hikes. So what was the reasons behind that?
Well, essentially some of the pessimism that greeted us over the last 6 months is starting to fade. So what we saw is this rally in global bond yields. So they went much lower, but now that global economic activity is starting to improve, that bid in the global bond market is starting to fade and bond yields are starting to rise. So we're starting to see a normalisation of global bond yields.
Okay. And finally, Bob, the Australian dollar is starting to dip lower, actually falling below 70 cents against the US dollar in the last couple of weeks. What was the reason behind that?
Well, we've had very mild inflation in Australia. So if we looked at the March quarter, the annual inflation number came in at 1.3%. And this is well below the Reserve Bank's target of keeping inflation between 2 and 3%. So we're underperforming on inflation. And because of that, but also because of the weak economic data that we've had recently, so falls in building approvals, falls in car sales, retail sales being very slow, the view in the market is that the Reserve Bank will be under significant pressure to cut interest rates. And with that pressure, we typically see a lower Australian dollar.
Thanks for your time, Bob.
Thank you very much, Sinead.
And thank you for joining us.